Welcome to Law Easy. My name is Marty Shenkman. I'm joined by insurance consultant Bill Boersma. The topic for this video clip is giving life insurance to charity, and I can tell you, which I didn't tell you before, this is something I've done multiple times where I've bought policies or had charities buy policies, and I pay the premiums each year, and it's a great way to assure a gift to a charity. And apropos to the other video clips I've done with you and Richard today, I have those policies reviewed every few years to make sure they're performing so the charity actually really gets the money. Good. Which is the objective, is to help them and not just create a cute plan. So if you have an existing policy, and one of the topics, there's another video clip on the website, was what to do with an existing policy because of the dramatic changes in the law. One of the options we didn't talk about, and we saved it for you, is one of the options to give the policy to charity.
Yes, it is.
Is that a good thing? Is that a bad thing? Do I get a massive tax break equal to the death benefit, to the face value, to what?
Well, that's a good point. Yes, charity and life insurance can go together very well. As with you, my wife and I have done the same thing. And that's buying policies at the beginning with the specific intent of the plan, with the charity originally owning them.
Right.
But if you have a policy and you want to get it to charity, fundamentally there's one thing that you need to do before you do that, and talk to somebody who understands. Because more often than not, there's going to be disappointment after the fact, because the deduction, despite the fact that there was altruistic tendencies here, nonetheless, that notwithstanding, you still want to get your deduction. And more often than not, there's a large, significant misunderstanding about that deduction.
And what is the real deduction? And then I'll mention briefly some of what the new law has done to the deduction quickly. Okay. But what is the deduction? Because you're right, people are often shocked, not just disappointed, shocked at what they're getting.
Yep, obviously it's not the death benefit, but most people think it's the cash value.
Correct.
Okay, I get the cash value. Problem is, you don't get the cash value. The tax law is it's going to be the basis or the fair market value, whichever is less. Okay, and that means that cash value is usually an irrelevant factor in the deduction.
So you really have to get a consultant to give you an appraisal of what the value of the policy is. Get a Form 712 from the insurance company, but I find too often they have multiple values.
Well, they do have multiple values, but yeah, over the limits, which I believe are $5,000, you need a third-party appraisal of this policy.
And I would assume that in a lot of cases, the policies we're talking about are going to be large enough to warrant that.
Yeah, they are.
And I think a lot of people get surprised because they think it's the cash value. They don't even have to go through this process, and then they find they have to bring in a consultant, get a 712 from the insurance agent, have somebody look at it. It's much more involved than is often realized. Doesn't mean it's not a great opportunity, but
it could still be a great opportunity. But even if you bought a $10,000 policy back in the 60s, today that might have a significantly higher cash value that definitely warrants and requires the appraisal. And so I've also found that the charities themselves don't bring this up beforehand. They accept the gift.
Right.
And then later, when the tax time comes around,
the charities are looking at different things.
They're very different things.
We'll talk about in a
They're
minute.
not trying to get away with something, but they're,
So keep in mind also, not only do you have the limitations on what can be deductible that Bill just mentioned, you have these potentially somewhat involved or costly third-party involvement to make sure you're getting it done right. You're going to have to talk to your accountant. I don't want to belabor it because there's other video clips on the site on what the 2017 Tax Act has done to charitable giving, but unless you exceed the standard deduction, which is about $24,000 for a married couple, you may not get any deduction for this. So on smaller transactions, there may be nothing. Another trap just to be mindful of, I've had people go through this process only then to realize, oh, the policy is owned by an insurance trust. Is it a grantor trust, non-grantor trust? What's the consequences? Can it be donated? Can the trust donate a policy if there's no charitable beneficiaries? You got to make sure you take a look at the big picture before you get too far down the pike. One of the other things we should just talk briefly about, when a charity is going to be a donee, what are they concerned about? So my experience is that most charities will have gift acceptance policies generally, and they may even have a special gift acceptance policy for insurance. So if you have a favorite charity, and you all should, talk to them and find out if they have a specific policy as to what and when they will accept an insurance donation. What are some of the factors that charities are concerned about?
Well, you nailed it on the head with make sure you understand their policy, because there are some charities that will summarily cash the policy in. You may have a very valuable policy and you want that death benefit to go to those things that you care about, and the charity's policy is, no, we're going to cash it in. Now imagine cashing in a guaranteed UL policy with a large guaranteed death benefit and a meaningless cash value. That could be a worse.
What a waste.
What a waste.
Yeah.
The other issue that I find them asking me about before they take acceptance is that we've talked a lot about these policies that are underwater, policies that aren't going to pay a death benefit.
Correct.
In the worst case scenario is policies that have huge internal loans that when they collapse will be adverse tax consequences for the policy owner. Well, we sometimes find the owners trying to offload those policies onto charities.
Charities are aware of that, and they look for that.
Yes, they are. So you're not going to get very far there.
One of the other things that I find charities often ask about, too, is funding. So if you're going to donate a policy, are you committing to make premium payments? Another thing I find charities very rightfully concerned about. So if you're giving me $5,000 a year as a donation, and you're going to donate a policy that's a $2,500 a year premium, are you going to give me the $2,500? And if your response is, yeah, I'm going to give you a $2,500 donation instead of $5,000 and just reallocate the same money, why are they going to take on a policy if in effect it's a wash for them in terms of incremental wealth? What charities really like to see, and it's a wonderful thing to do, is you donate a policy and you will make donations each year to make sure that policy is funded and they have the policy evaluated to know that it's performing well, and you don't reduce your annual giving because they need those dollars to keep the lights on.
Yes, they do.
Any last comments on charity as a recipient of a life insurance policy?
Ask questions, find somebody who understands it before you do anything.
Do good deeds. It's a great way to help your favorite charity. If you have policies that have really no longer serve the purposes for which you bought them and you can't repurpose them for other reasons, and we've had a couple of video clips that talk about that, it's a great way to give a policy to charity that you care about. But again, as we talked about, there's a lot of issues and traps. Thank you for joining us, and please remember that the video clips are for educational purposes only. Don't take any action without talking to your own advisors.